What's happening, family? Hope everybody had a great and blessed weekend with their families and loved ones. So, I posted in the Discord group that I was going to do a video about OrderFlow and how you can utilize it to your advantage, right, for entries. Um, so, without further ado, let's get started. Now, let me first get my presentation screen in front of me like this, okay? So, yeah, before we dive into the live chart examples, I would, excuse me, I would like to show you guys um, yeah, what OrderFlow is and how they work and how you can use them to your advantage, right? So if we look at this scenario, we see clearly a bearish bias, right? Bearish trend, so to say. Okay, now we don't want to focus on structure and inducement that much in this video to keep it short, because I already explained those in a recent video, right? So you can look at that video if you want to learn more about mechanically reading the structure and where to look for liquidity, like inducement, engineered liquidity, etc. So just focus on the order flow entry criterias or models, right? Okay, so just to be sure, let me get this here. Okay, sorry. Now, it is important to define your structure using this concept or approach. So just a quick a recap, so to say. So if we look at this, right, this is our recent high, and here's our inducement. Liquidity is taken out. That would validate this low, so this would be our next lower high, right? And this would be our next lower high. Now let me change the color. Okay, so this being your lower low, this being your valid lower low, and this one also being your valid lower low. Why? Because everything between these two dots here is internal structure, right? So your major structure looks something like this. Let me quickly draw it like that. Okay, and then we have these structure points like this, right? If you can remember it from the previous video that was recorded during the group session, right? So just a quick recap for you guys to recognize what I mean, right? So the cyan color is like your major structure. Everything in between is your minor structure, right? So lower low, lower high, lower low. Why is this your lower low? Because we have like quickly like this. Oh, let me change that quickly for a minute. Okay, and let's mark this one so we can see it more clearly, and let's call this IDM, indicating inducement, right? And now let me copy paste these quickly. Oh, pardon me. Too short. Okay, So now let's do it something like this then. Okay. Right. So these are your valid lows and your valid break of structures, because liquidity was taking out before they broke structure points. Excuse me. This is what I wanted. Yes, thank you. And let's mark these as our BOS, right? And let's give it a blue color. And let's change this line color into gray. Okay, so this being your valid BOS, right there. Okay. Again, why? Because the inducement is taking out. Oh, sorry, I should point it out on the other side, because market came here. We don't see really inducement there in this example. So right, this will validate your break structure because the inducement here was taking out, right? And then break of structure, and the same thing happens here. Okay, just bear with me, guys. Quick recap. So you can see the whole or bigger picture when I explain it to you guys, right? Okay, so in this scenario, what do most people do, right? They think, okay, this is a BOS, right? Something like this. This is a BOS, and this is also a BOS. And what do they do? They look for refined order blocks to enter from. Okay, pardon me. Yeah, like that, right? But these are bad places to enter from. Why? Because the liquidity is not taking out. If you see this in the markets, don't enter right away. You could enter after the liquidity is taking out, right? But again, that's not the topic in this case, because there are far more or other criterias to look for when you look at the bigger picture. But in this case, people see this as the zone that broke structure, and they got stopped out here and here. So they look for like an extreme order block to enter or re-enter from, right? But what do you see in most cases? The price comes near to your order block and then leaves without you tapping in. And the reason why this happens is because the markets move on order flow, right? Order blocks are just refined order flow areas, so you can minimize your risks and maximize your potential rewards, right? So in this case, if you have looked at like this, for example, right? So your order flow is your last, in this case, the market is bearish, right? The momentum is bearish. So you should look for your last momentum bullish momentum, excuse me. And when the price reaches those areas, you can look for entry models, criteria as per your plan. And in this case, your order block, your order flow would have been like this, right? So obviously a bigger move, but nonetheless, the last, and this extreme one is called IFC. So that's a short for institutional funding candles or funded candles. And this one is the extreme one, and this one is in most cases also valid. if this one is mitigated like this, right? So you are following your major structure order flow in this manner, okay? So don't do mistakes and think these are also order flows, because again, this is your inducement point, right? So it doesn't make sense if people are getting trapped here or induced for sells, and price will stop them out eventually, because most of the traders have their stop losses sitting here, right? It doesn't make sense if you look at this area for an order flow, right? Always look for the external or extreme ones. In this case, this one and this one, right? So this one is not valid. Let's make it red. And of course, the same goes for this one, right? You get the picture, I hope, because these are again mostly smart money traps, right? To induce people and then liquidate them, because the markets move. On liquidity, right? And that in a result creates the structure, right? Because look at this, if everybody gets stops out here, that creates a structure, right? Because people expecting this to happen, right? From this point here, but it doesn't, because the big guys will stop out everyone first, and then perhaps in this scenario we'll tap a extreme IFC, right? And then move to the downside, okay? So very important to keep that in mind, all right? Okay, let me remove this just for a second. So basically, let me just put it quickly like this, right? And then let me give it another color, like blue perhaps. Okay, so the difference between order block and order flow is that the order blocks are just refined areas, and those can be different to each person, right? To minimize or maximize their profits dash risk. Okay, so and in most scenarios this happens, right? Price comes up and does not tap people, but moves to the downside, leaving them here waiting. Bad. So the order flow is actually the area you should focus on, right? And especially if there is inducement or engineered liquidity or any kind of liquidity, like equal highs, perhaps internal trend line liquidity, etc. Okay, so read the structure correctly, okay, looking at the major points, right? Because after this inducement was taken out by this move here, the price came down, right? And then broke the most recent low. Okay, so that validates our break of structure here, because everything again in between these two dots is your internal range, right? But that's another topic. So I hope so far everything is clear for you guys, and yeah, now I like to dive into the real charts to show you an example. So just before I do that, I do believe I had prepared something here. Yeah, so again, we are in a bearish scenario, bias, or momentum, however you want to call it. And just to point out very quickly, the areas that I would like to identify as order flow, right? So this would be your order flow, right? And let me copy paste this for a second, and then this would be your next order flow, right? And as you can see in this example, your extreme order flow got tapped, right? And then it broke out the previous low, okay? Did a little pullback. This created then your inducement. So let's mark this quickly as your inducement. And why do I mention this? Because I will show it to you guys in the real life charts that this can be a very powerful combination, right? The order flow areas, the inducement or liquidity, and then a sweep of the inducement into a order flow area, right? So your liquidity here, your inducements, most of the time, if not every time, but most of the time, this will be like a buy side liquidity sweep or taken out, right? So look for these patterns. Let me remove this so you can copy the image to your brain, but look for these patterns, right? So read your structure, okay? Identify your order flow areas, and then identify your liquidity, and in combination the three of these criterias, right? They give like 90% of the time high probability entries. I'm not talking about how to enter from this point. I'm just pointing out that you should train your eyes to recognize these patterns or concepts, okay? Because the entry can be done on many different criteria, right? But that is also another topic. I will make a separate video about entries. But yeah, so identify your structure, right? Identify your order flow and your liquidity point, and if you put them together, structure, order flow, liquidity, I call it the SOL strategy, right? SOL. Yeah, just a silly name, acronym I came up with for this approach. But because look, most of the time here also, what are people doing? They are, let me give this another color, like perhaps this. Yeah, that will do. So the blue one, obviously your order flow, right? Your last bullish momentum before the market or price broke your previous low and continued the bearish momentum, right? So if this happens, most of the people see this as a break of structure, and they look for refined order blocks or point of interests, however you want to call it. And they do the same here. But in this case, what happens, right? These are all just smart money traps, okay? And again, why you should not make this your order flow? Because market created an inducement point, right? Because if you look at this, as we discussed in our previous videos, so here sits liquidity above, right? So just logical thinking, if you should not place your order from this area, by all means from a refined order block area, then you should also not look for a sell from your last order flow area, because this is your liquidity, right? The liquidity must be taken out, okay? So very important to keep that in mind. Now, if we bring the whole picture together like this, now let's say this here is our high, lower high, right? Then this point here would be our next lower high. And let me get my red dot here, and this would be your lower low. Everything in between this is your internal structure, right? Because the liquidity here, the inducement, right? Let me just quickly pull that up like this. Okay, so your last pullback got liquidated by this deeper pullback, and if you look at these smaller pullbacks, right, as I explained in my video, look always for the deeper pullback, because most of the time these are the liquidity sweeps. And in this scenario, right, maybe you can not call it a deep pullback because it's internal structure, and that's why we have to focus on the last liquidity point here, right? And this could be your engineered liquidity all the way up here, right? Okay, and that should be also a good example, I believe. So if this is your engineered liquidity, the extreme, right, and this is your inducement, again, most of the time, what do people do? They look for a refined order block, something like this, and they think, okay, the inducement is taking out. I will wait until the order block here is tapped, right? But again, the price does not move on order blocks. It moves on liquidity, right? It needs liquidity to be taken out before it moves in the direction it wants to move. In this case, bearish, right? Because yeah, the markets run on liquidity, just like we humans need oxygen to be alive. The market needs liquidity to be alive, to make those movements. That's what I mean by to be alive, right? So in this case, you know, pardon me, people are waiting here from their refined order blocks, you know, to be tapped. And some people that entered from this area, they got induced or manipulated, and this is your smart money trap, right? Because you always have to wait for the liquidity to be taken out. Well, you've done that, you recognize this as your smart money trap, right? You did not enter, you thought, okay, well, I will wait for this extreme, right? But you never get tapped, and price did move without you. And yeah, that has to do with this, right? Because if you had looked in your order flow, liquidity, price taken out, and then you could scale down to lower time frames to look for entry criteria here, right? Okay, so now let me remove this, and let me also quickly mark my break of structure here, like that. And now, why is this a valid break of structure? Because the liquidity is taken out from this leg, right? It doesn't matter if it was here or here. Your first pullback here is your inducement, and your extreme pullback here is your engineered liquidity. And as soon as this is taken out and price moves to the downside and closes below this, then this validates your break of structure. So these right here are not break of structures, okay? Because the liquidity here was never taken out, this was never taken out, and this is your internal structure like that, correct? Okay, now if we add just quickly this one right here also, okay, now I would like to bring this also to your attention because, oh, pardon me, this validates now also our break of structure like that. And why is that, you think? Now, if we look at it structure wise, like this, okay, so lower low, lower high, lower low, lower high, right? You think, okay, but I don't see any inducement here taking out, right? Well, you're right, because we would have liked to see something like this, right? And then this, and then price takes out the inducement and then move to the downside. But that did not happen. So why do we validate this as a break of structure and this as our lower high? Because look at this here, right? There's your inducement, because this move here has confirmed your minor structure break here, right? So, and what happened after that? Let's have a look. Price came down, up, excuse me, took out this inducement here and then moved down. And why do I bring this to your attention? Because if that happens in combination with this order flow area, then this is a very high probability entry area to look for, right? Because most of the people would do this as a break of structure, but no, this is not a break of structure, because price may move something like this and then perhaps take out the major inducement here and then move to the downside, right? So it all comes down to probability. So you have to be patient and you have to learn to sit on your hands and let the market talk to you. Don't anticipate, or don't just react, you know. Don't think, okay, because I mark these areas like this, maybe the price is going to do that. No, the price don't care what you want, right? The market moves again based on liquidity. It could be this one, it could be this one, it could be even this one, but in this case the minor or internal liquidity was taking out here, right? And that happened after this order flow area got tapped. So then you can perhaps look for the continuation, but you have to wait until there is another inducement point created, right? So this being your internal and this being your major or external inducement, okay? And this one can even also be your major or external, and this is your major extreme, right? So very important things to keep in mind. That's why I would like to bring this also to your attention. And now let's look at the real chart where things get all excited, right? So let me remove these, hide it. Okay, and it doesn't matter which time frame you use, but in this case, yeah, it's not per se a top-down analysis or so, but again, in this video the focus lies on order flow, not structure or your entries per se. Okay, just keep that in mind. I just want to show you guys that you must train your eyes to see certain things, and from there you can plan your entries, right? You can add confluences like single mitigation candlestick entry, but yeah, in this scenario I just want to point out the order flow, right? Because yeah, you can mark your structure points, but the focus in this video lies on order flow. Now, before I start, I would like to give you guys like a 10-second window, so you can have a look at the chart and try to identify where you think the order flow areas are. And in this case, obviously we look for bullish order flow areas, right? Because ignore everything what happened here for the moment, right? So just focus on like from this high to this low, right? Where do you think in this gray area are all the order flow running? Where you can look for possible entries, right? Too short, okay? Because yes, backtesting. Oh yeah, that's also another point I will bring to your attention. Backtesting is a must, you know, but before you can backtest properly, in my humble opinion, it is also equally important to recognize certain concepts by looking at the charts before you backtest them, right? So you can go back, and while you're backtesting, you can wait for certain things, but it is also important to look at a chart and think, okay, in this example, like, okay, well, I only have GBP JPY here, but yeah, try to, in this case, structure, right? Try to recognize correct structure, but the same goes for order flow, the same goes for entries, the same goes for everything. You have to identify why did price did that in this area, or why did this happen in this area, etc., 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 right? So you have to identify first important price behavioral movements by just studying charts before you dive into backtesting, and make notes, mental notes, write them down, whatever, you know, make an essay or a thesis, document, a journal, whatever. But you have to do it, right? You have to train your brain, your mind, your eyes, everything to recognize and act or react or behave when you see those patterns occurring during your backtesting, so you can apply them later on in live markets, right? So in this case, just by looking at this, again, back to order flow, at this movement here, right? Yeah, I gave you enough time, I think, to try to recognize the order flow areas. Now, let's get started then. Let's give this a nice color, like purple, okay? So, in this movement, right, on the top, where is your order flow? As we said earlier, right, always look for the bullish momentum, the last bullish momentum in a bearish bias, okay? So this would be your first order flow, okay? Where would be your second order flow? This one, okay? Where would be your third order flow? If you look, the price broke here below, and well, actually this one did get mitigated, so let's focus on this one, right? So this was your low, price moved up and then went down, okay? So if we grab our bullish last momentum in this movement here, right, that will be that area, okay? So, and then what happens here, you can also, if I look here, because this was your last bullish movement like this, is very narrow, but let's have a look here, like that, right? So this was your last bullish movement, price broke below it, right? So this movement or two candles could be your order flow area, right? And look what happened after the price broke out of the previous low, it came back. And this is the power of order flow, right? From this movement, it broke down, okay? It even got back immediately, but I would not consider this as a valid retest, because this was just a consolidation of 3 candles, right? So this was the obvious move that you can clearly see that broke the structure. And then what happened? Price came back, tapped the order flow area, and started to move down. Same thing here. Last bullish move here, the price broke right below this movement here, okay, and then came back and it tapped it multiple times. And this here would be like a high probability entry, but I will get back to that in a moment. And here also, right, this was your last bullish move before price broke out the low within that bullish move with high volume and momentum, but eventually came back and tapped here back in your order flow area, right? And the same goes for this one, okay? The last 2 bullish candles was your momentum, price broke out, and price came back with the next candle, tapped you in. So I'm just showing you guys how you can utilize the power of order flow within your strategies, okay? Because yeah, if you would be like very conservative, you could have done something like this, okay? But look at the stop loss, like 37 pips, and perhaps you could, let's have a look here, this area, I see here a equal low, I believe, so okay, something like that perhaps, let's have a look. Yeah, price was indeed coming there, so you can trade like this, but personally I think for our, you know, if you are trading a 100k account, a funded account, then yes, these trades are most likely your source of income. You don't need ridiculously high amounts of RRs, right? And you could trade like this because like 4% of your 100k account, if you can catch 2 trades like this, you know, 2-3 trades like this in a week, then that's enough to come by to live, you know. But yeah, I think it's a personal thing, because I would have entered differently, right? But these are very high probability entries, so to say, to make, right? Because you're focusing on the major order flow in combination with your structure. Of course, we didn't mark those, but they also play, of course, a very important role in this. And you know, then you can take trades like this, and you don't have to worry that you are getting stopped out, because 9 of the 10 times you won't, right? Because yeah, so back to the lesson. And after this, where we would identify our next order flow, you think? Because look at this one is already mitigated, right? So what you can do is perhaps look for this minor bullish candle, okay? Normally we wouldn't look at this area, but because that candle itself already mitigated the order flow sitting above it, right? We can use that as our next order flow. And as you can see, price came and went down again, right? So next order flow, I would mark out perhaps this area, right? Oh, sorry guys. This little move here, right? Because this order flow is already mitigated, and then we can, and because order flow works very well in a trending environment. I forgot to say that. So in ranges it could also work, but in ranges we use different types of order flow. I like to call those the major order flows, or the IFCs, right? As I explained earlier, the institutional funded candles. Most of the time extreme ones, right? Or the institutional order flows, as they called. In a trending market, you can look for the minor order flows like this using your structure, right? And momentum. Okay, so also very important to notice. Now, after this, what happened here? Well, this is a way too big area to be an order flow, and then the market was dead here, and after that here, the Asian session opened, and then the market continued further to the downside, right? So where would be your next order flow, you think, in this whole case? Because this was just a sideways action, right? So if you look closely, I would say this area would be your order flow, right? So let me look and price again. If you were patient enough, it did take a day, but if you are patient enough, you see that the market quite nicely respects every time the order flow, right? So yeah, you could have made an entry here, first, second, third, fourth, fifth, sixth, seventh. So in like a week time, you could have entered like 7 trades, right? And if you would have marked this as your target, and as you can see, yeah, so the equal lows sitting just above a possible entry point to look for longs, because look what price did here, right? But that's also another concept. Let's save that also for another time. So even if you had entered like this, right, from the let's mark it like this, even if you had entered just according to your order flows, right? Let's say this is 1 and this here is number 2, right? And let's get below the purple and above the purple, okay? And then your next entry would have been like from this area, right? Okay. And again, don't mind the ridiculously high stop losses, but just for example sakes, right? Just to give an indication. And where is our order flow here? That one was here, right? Correct. 40 pip stop loss, okay. But again, just showing examples, guys, so bear with me. And let's say this would have been an entry like that, something, and let's say this would have been an entry like that, right? And this here would have been also an entry like that, right? Oh, excuse me. Like that. Okay, so yes, you have ridiculous high stop losses, but chances are very likely that you are getting stopped out. So it could benefit you. And if you look at all the profits you could have made in that particular week, right? Just using, or not using, but utilizing the order flow. That's like 15, 10, 25, and that's 7, so that will be 32, 4, and that will be like 36, right? This is 7, and that will be like 53, and 9, that's 62, and 8, so 70 R, so that is 0.7, right? Not bad, right? So now the interesting part is, let me remove all these short position tooling. Yeah, now the interesting thing is, let's say you have marked your order flow areas like this on the 15-minute time frame, and what you can do is, like, let me go the replay bar to this area, otherwise I have to scroll back and forth every time if I scale in and out of the different time frames. But let's start from the top by looking at the 5-minute, right? 5-minute time frame, okay? And this one is our first entry here. Okay. Now let me just blow up that a little bit like that, so we can see things a little bit better. Okay. Yeah, so as you can see, if you scale down, you can even, like this, refine your order flows, right? Because that one eventually did tap that one, and this one was this here, right? So that could have reduced your risk a little bit. Well, this was perhaps even this one. Yeah, that one was also tapped, right? See? So this would have made a major difference in your minimizing of your risk, because it's like almost 2.5 times the size if you looked at from the 15-minute time frame, right? In this case, yeah, it wouldn't have worked, you know, if you would have refined your, well, actually, perhaps, yeah, this candle, you know, it tapped in and it did go, but you have to be lucky to catch these ones, because these transitions between candles happen, of course, very quick. So you could have catch this one, but if you are monitoring the charts live, so for the example sakes, let's leave it there, because then we can also see this one was obviously tapped, right? And now let's look at the next candle, like this, right? So this bullish candle, and just to be safe, put it above the doji candle here, right? And again, you can see it was tapped, right? Here the same, you could have, well, well, it's about the same area as the 15-minute, but doesn't matter, right? It could have also been tapped there, and I believe there was another one here, right? And let's have a look. Okay, so this one, the 5 and the 15 minutes are the same, so let's just keep it that way. Okay, and then of course no further candlesticks because we are in replay mode. Now what I would like to point out, the SOL strategy, right? SOL, or any other kind of entry criteria you could utilize or apply to make your entry, right? Because if you look at it like structure-wise, you could have marked this as your inducement, right? And let me mark it like that, correct? Because this here is your movement, right? Price broke below this. This is your most recent high point in this move or leg. So you could have waited until the inducement is taken out, right? And let's see what price did here. I believe this is a very, very narrow BSL. Let's have a look. No, just not the case. Okay, so yeah, you could have waited until the inducement of course is taken out, and price perhaps did something like this, right? And then wait for the inducement to be taken out here, and then you could have entered from like this above, okay? And you could even mark this as your potential point of interest and wait for the price to come back. Most of the time I use this approach for my second entry, the first one being aggressive here, right, after the inducement is taken out here, and then the second one after it broke structure point here, it came back and retested this order flow area, right? I entered here from for a second position, more conservative entry. Yeah, but that's just how I do things. I'm willing to take a risk if this one does not work, and should the price go like that, you know, but then I catch my entry later on with my entry type 2, okay? So in this case, maybe you could even go to the 1 minute time frame. Yeah, that's what I mean. I have to scroll back a little, but it's a good thing. Oh, we have our replay function on, because that way I don't have to search that way back. Okay, now if we look here, okay, but yeah, I could have entered from multiple places here from the 1 minute time frame, but yeah, these are a little bit more advanced techniques, right? So but again, basically they are the same because everything is fractal, right? Like structure, liquidity, everything. So also your entries can be the same, that were based on your 5 minute or even 15 minute time frame, but from a lower time frame, because everything is fractal. But in this scenario, you have to be a little bit more advanced, I think is the correct word, to get an entry here. Because in this case, what would I have done? After the price tapped the order flow area, I would have looked and marked this here as my liquidity sweep. So let me mark that as sweep, right? So this would be my liquidity sweep, right? The next candle, as you can see, the black candle here, engulfed the body of the last bullish candle, the gray one, right? So, and this is what I mean with single candle mitigation. You don't have to wait for price to break, like first structure here to the downside, and then wait for price, I don't know, to come back to like this order block, you know. In this case, you would be stopped out also. But my point is, you don't have to wait, because you know what the market bias and momentum is, what the behavior of the market is, and you could have entered like a single candle mitigation entry. So your candle that the highest candle that tipped in your order flow, right? After it did a liquidity sweep, look at this, it did not close above it, but it just did a sweep, right? Just to zoom in for you guys to see better, right? Now, the next candle engulfed the candle here, okay? So what you could have done is you could have entered from this candle here, okay? Let me mark it out correct. This candle, yeah, the black one, not the gray one, sorry guys, but the black one, okay? So this could be your sniper entry, or however you want to call it, but it is a single mitigation candle entry, the technical term. So after the liquidity is swept, right, engulfing candle, and then this candle becomes your point of interest, not order block, but point of interest. And then what happened, you know, price closed below it, and then came back, tapped you in, and then moved further to the downside. Now, if you had used an entry like this, for example, you would have even had like a 2 pip stop loss, right? But just to make sure, put it on 2.5, okay? And then you could have again targeted the TP target we marked earlier for our other example. I believe this one goes quite deep because it's the 1 minute time frame, but just to show you guys the power you can utilize of order flow as your areas where you can look at to identify sorry guys the areas to identify for possible entries, right? Because if you look at it now, let's say, oh, look at that, that would be a 90, so 90R position. So this is like insane accuracy, right? But like I said, these are pretty advanced entries, but I would like to come back to what I said earlier. It's important to start recognize patterns before you backtest them, right? Because if you look at it like I did here, right? Okay, the first entry point, I believe here, okay, right? So you identified your order flow, okay, and then price came. Now what happened here after the price came back into the order flow? You can go to the 5 minute time frame, right, and study the areas, right, for price behavioral patterns or entry models, entry criteria, however you want to call them, right? Because here on the 5 minute time frame, you cannot see the entry that I have placed on the 1 minute time frame, right? Just to give you guys perspective. And from there, you could see, okay, the price had tapped, obviously, in the order flow. Now let's go to the 1 minute, etc., etc. Right? You get my point. And you can do that by every order flow area, right? So if you go quickly, let me remove this fictional 90R entry. Well, actually, let's keep that one there, right? So now what happened here? The same thing happened again, right? So now we are on the 5 minute time frame. Okay, you see, here you could have get your second entry from the lower time frame perhaps, and presumably also with a far better risk reward ratio, instead of using your entries like this something, right? But yeah, it all depends on your risk appetite, on your way of trading, correct? So I can see, okay, on the 5 minute, price tapped into the order flow area and even closed within it, right? Okay, let's have a look what the 1 minute time frame is showing from that same area. Okay, go, and that will be here, right? This point. Interesting, right? Same pattern happened again. Look at this, right? Here you got first tapped in. This was your highest point after you got tapped, right? So here, this would be your liquidity sweep. Let me mark that one like that. Okay, and then the candle swept that liquidity here, right? And then we had an engulfing candle, and the same idea, right? You put your entry below the candle, okay? Stop loss above it, and in this case perhaps you could go even for a 6 pip stop loss, and again the target would be, of course, the same TP as earlier, right? So again, the same concept, okay? So just pointing out how well the Sol strategy can work if you utilize order flow in combination with other concepts together to add more confluence to your entries. Okay, so now let's have a look at the next entry area. Okay, we are here on the 1 minute time frame already, right? So you could have refined these areas again, but I would not refine them too much because the 5 minute is perfect, right? If you mark them on the 15, you refine them on the 5, then don't refine them on the 1. Just leave them and look for your entries from the 1 minute time frame, okay? So what happened here? I can move this one, I believe, a little bit, but okay, well, let's leave it for now. Yeah, again, what happened here? Price tapped or kissed the order flow, right? And then it went down a bit, right? And then came back. It swept the liquidity of the previous high that tapped the order flow, right? And then in this case, it did not engulf any candle, okay? But look at all these wicks here, okay? Here happened the same thing again, like, well, you get what I mean, right? On a smaller scale. Oh, excuse me. Okay, so the same thing happened again, right? And then this candle did also not engulf it, But what you can do is, again, use the whole candle like this for your possible entry, right? And in this case, you could have gone for like a 4.5 pip stop loss, okay? And again, target the same, TP, right? So because of this happened, and you implement the single mitigation of the last candle that continues the bearish move, right? So the single candle mitigation technique or concept, then you could have caught this move also, right? So very, very precise entries altogether. And for this one, this move, right, our 5-minute order flow, price came here, okay, and it wicked and it came down. Well, in this case, you know, I think personally I would not enter, but there are wicks, right? So perhaps you could look for more to the right side, but no, I think I would not enter here because it does not fit the entry strategy that I would like to use, right? Actually, if I look here, I can see again on a smaller scale. Okay, yes, I see it now. See, that's why it's important to read charts alongside the backtesting, because reading the chart will give you an idea of what to look for when backtesting, right? Okay, so the price indeed came in, tapped here, and then swept this recent high here, and then left a very big wick here, right? And then the next candle did engulf it. You see, I didn't notice it at first time, but now I certainly do. And in this case, right, because there is such a huge wick, you could have entered probably something like this, because if this is the candle, then you would probably look for the price to come back a little, to push above before it continues down, right? So, and in this case, yeah, I believe 6.5 pip stop loss would be reasonable, right? And again, the same TP as earlier, okay? And then what happened? Again, that engulfing candle here, the black one, that engulfed the previous candle to the left, right? Body-wise, came up and did fill eventually the open price gap that was left behind here, right? So you could have even entered with a stop order, something like this, when price was hovering here, right, in anticipation that it should continue down, okay? But that's up to you. A more safer entry would have been like this, okay? Yeah, you have a bigger stop loss, but who cares, right? Because you have already 3 mega entries. So what does those extra few pips stop loss make the difference? No, I don't believe. Yeah, so let me remove this one. Yeah, so also a valid entry, right? And if we look at this entire order flow, and we are still on the 1-minute chart, right? And look what happened here. Okay, so the last low here got swept, and price did not close above it. Something like that, right? Sweep. Yeah. This one here. Very minimal. Okay. Yeah. And then we had, of course, our how can I say it, engulfing candle, okay? And from here, without any other concept, like, I don't know, let me go quickly and do something like this, because most of the people would have waited for perhaps this to be broken first, right? And they would identify this as a break of structure, or even perhaps a change of character, because we have tipped a point of interest above, right? So change of character, break of structure, both are the same, just different names to identify different concepts, right? The same concepts, but yeah, you know what I mean. But yeah, the most people, they would have waited until the price is broken here. Well, that happened, okay. And then they perhaps would have looked for entries from around this area, identified this as their order block, and then look what happened here, right? Let me just adjust that one and make it red. Sorry, red, yes. And look what happened here. They got tapped, right? And they were happy because they think, okay, we're in profits now. And then what did happen? Price came back, tapped them out exactly at their stop loss, right? And then continued further to the downside. Okay, so this is basically a smart money trap. And those did not pay attention to liquidity. This is your inducement, right? Okay, because this is your pardon me, this is your move here, right? Price broke below this and then came back here and then started to move to the downside again after it took out the inducement here. Okay, so you could have also entered from here and probably you would have got stopped out, but that's okay because it's all in your strategy, right? And like I said earlier, if you enter directly after the inducement is taken out, this is, yeah, like a 50-50 probability that it would go in your favor. The more extreme ones are like a higher probability, right? But if you look at this, you could have also identified, and that's why it's important to train your eyes, right? Okay, so you could have probably identified this area here as your minor order flow. Okay, now this time let's make it gray. So you have your inducement, right? And forget about this because I just wanted to show you guys, you know, where people are waiting for their order blocks to be mitigated, but then it's an actuality, a smart money trap, and etc. So this BOS is still not valid. This is your actual BOS. Let me just quickly put that back here, right? This is your actual BOS because this low got taken out by price after the liquidity of the most recent move or high got liquidated, right? So this is a valid BOS, okay? Because this inducement here was not taking out and this inducement here was not taking out. This is not a real inducement because price never broke below this. Okay, so the real important one is at the moment here, sitting here, okay? So you have to be patient, you have to wait, okay? And some people read all these areas like order blocks, right? But these are all smart money traps, okay, just to induce novice or traders, you know, into sells, but they're just being manipulated because the price moves based on liquidity. That's their oxygen, right? Remember? But again, coming back to your minor order flow, this could have been a valid entry also, right? But in this case, I did not focus on the order flow, of course. I did focus on the inducement. Now let's remove this one also. So what I'm trying to say is, where were we? I believe here. Pardon me. Right. So here, you could have also entered here, not necessarily there. This could be your confirmation entry or conservative entry. This could have been your aggressive single candle mitigation entry again. Because look at this here, this scenario here, right? Price broke below it, it came back, and then what happened here? Just zoom in a bit. We had again the last high that tipped back into the order flow got swept by a liquidity sweep. Pardon me. Okay. In this case, it was no engulfing candle or whatsoever. So you could have entered something like this, taking the whole doji candle and this being a 3 pip stop loss, right? Okay. And then you could have taken like your entry like this, okay? And then price opened here, okay? So it would have been a stop order, right? Price opened here, pushed a little bit to the upside, came back, triggered your trade, and then more rejection candles. And here you could have done exactly the same thing. Look at this. Like that, you know. Now, this is of course not based on order flow, but purely on liquidity mitigation, because this candle got liquidated by this candle, right? And then this candle and this candle got liquidated by this candle. So basically, you can do even something like this to give you a better picture, right? Okay, so now this one is also liquidated. So what you could have done is you could have entered, oh yeah, of course, you could have entered like something like this again. Well, you can keep your stop loss, I believe, at the same place, because it covers this candle and this being mitigated here. Okay, liquidity. Okay, yeah, you could even do it something like this or this or even this, but in this case let's just keep it on 2.6 pips, right? So again, price opened here, went a little bit up, and then boom, broke down. So again, a double entry right after minor order flow is being retested, and then look for these patterns, right? So with these kind of entries, you can get like crazy RRs. I believe I could have like get 500R within 1 week if you had done it like this for 7 positions. So crazy, right? These are very powerful entries, and you have to train your eyes first by studying the areas like this, how price behaves and what it does, before you put it to the test and back test them, right? Because yeah, it's equally important to do that. Back testing obviously is key in your make it or break it, or succeeding, yes or no. But this is equally important, so you don't have to backtest and learn like at the same time. You can learn the theory, or practical theory maybe, by identifying these areas, right? Put it into backtest and then journal everything and then study your backtest again. That will be the ideal order of doing things, because that's always how I've done things, and in my case they always benefited me so far, right? And everyone has to do, of course, what works for them, and what works not. In my case, this works just fine, you know. So moving on, this order flow, I believe this is the last position, and look what happened here. Again, the same principle happening over and over again, right? So let me just quickly zoom into this area right here, like that. Okay, so this got taken out, this one got taken out, and then you see it's important to look at the candles, because one could say, well, Attila, here, this was your last recent test of the order flow. Why did you not enter after this candle? All right, but again, you have to wait what the candle after that shows you. Okay, so, and in this scenario, as you can see, the market or the momentum was pretty bullish, right? Just a few counter candles, so to call. So this one has very low volume, this one is getting bigger, and this one is also getting bigger, so what you could have done is look at this after this candle sweep here, right? Like, move it just a bit to the upside, okay? Because this one is higher than this one. I believe it is 0.000 pips or so, but it is higher. So after the last candle here, you see, the market was showing signs of continuing to the upside. Here you got a lot of like wicks and etc., right? So if I look at this, would I have entered from here somewhere? Well, probably from around this area or so, right? This being your inducement, this being your engineered liquidity from this move here. Yeah, probably I would have been tapped out there. Yeah, this would have been your order flow here, right? Didn't look any further, but you see this move here, because this was again after you got tapped in your point of interest or order flow here, the market started to move to the downside, obviously, right? So if you look at this, this would be your last bullish push to the upside before it broke beneath it. Then you could have waited, inducement, staking out, engineered liquidity, staking out. You got a retest of the order flow, and in this case you see this one taken out here. Yeah, you could have probably entered with a move like this again, but this would be a bit risky, I think, because it did not engulf the previous bullish candle like I would see, but yeah, sometimes you gotta take chances, right? It's also part of the game, because if you don't take risk, then you cannot always get your rewards, right? And I believe risk is also something you can exercise on, taking confluences, everything in mind, of course. But yeah, I believe risk is also necessary every now and then to enhance your growth, right? Because if you don't take risks, you cannot learn, and then you are sitting in your comfort zone, right? And there is no growth in your comfort zone. Okay, so also a thing to keep in mind. Yeah, I believe this was our last position in this example. Now let me quickly zoom out to the, I believe it was the 15 minutes, right? Hello. Yeah. So I hope everything is clear to you guys about the whole order flow and the possible entries you could apply. But don't focus on your entries at first, right? Just try to recognize order flow, and if you mark out things like this, just go like a time frame lower, like I did, and just watch what happens within those areas. Is there inducement here? In this case there was. It was taking out, okay? Price tapped the order flow and started to move down, okay? And for your entries, of course, you can scale even down further to the 1 minute or 3 minute, like I also like to use 1 minute and 3 minutes for my entries. And yeah, study these concepts, right? So I hope you could have benefited something from this video. And yeah, keep up the good work, family, and yeah, trade responsible and trust your system. But it is important to have perspective, right? And don't do things just because I show it to you guys, this and that, and you guys see my results, because there is so much more behind every concept. Yeah, like I said earlier, there is a structure. You must read the structure mechanically to identify your inducement, and then you can look, okay, are there order flow areas around those areas of inducement, right? Because just like this here is our inducement. Just a quick mark. Let me see. This was here also our inducement, okay? And I believe this here is also inducement, but there was obviously no order flow here. Yeah, you could have used this, but you never gotten tapped in, right? So inducement, and look, there is an order flow there, right? And the same goes for this here. Inducement, right, taken out. Price did not tap on your order flow, but eventually it came back, and it did. Okay, this was, I believe, your 1 minute inducement, but look what happened here. Okay, here's your inducement. Price comes back, taps in your order flow, same thing. Here, minor inducement in between. Oh, pardon me. Minor inducement in between this, if you guys can see it. Excuse me, guys. Got the cough. Yeah, so and then of course, if you add structure and everything to get the whole picture in combination with order flow, then I promise you guys, with this whole approach or strategy or concept, however you want to call it, I just give it a name to identify it like that, but just like ALS, you know, yeah, just go over charts, try to identify your order flow areas from maybe your 15-minute higher time frame Okay, and then go down to 5 minutes to look to see what's happening when the price retested those areas, and then scale down again to like 3 minutes, 1 minute perhaps, to see if you can spot or identify price behaviors for your entry criteria, right? So I hope this video will help you guys and will benefit those who didn't know this concept or understood it correctly. So I hope it gives a bit clarity on the subject. And yeah, I see you guys in the next video, I guess. I like this. This is fun. There will be more videos coming in the near future, of course, after I'm totally free out of my rat race job per 1 February 2023. So good times ahead, and a lot of good and fun things are coming. Okay, family, so good morning, good evening, good night, good afternoon, wherever you are, and I'll catch you later.